Hello guys and welcome back in this new video. Today we are going to backtest a new trading strategy from Trading Rush. I took 100 trades with MACD plus stochastic. So before we start, I remember you that if you want to know more about my software, you want more info about it, or you want to backtest your strategy, write me at the mail that I will leave in the description. But now let's talk about this strategy and let's see the basic result of this strategy. He said to backtest this strategy on forex pairs. I have done it, but the results are not as good as he claims. As you can see, the average success rate is it's not enough to be profitable, and as you can see, the strategy is not profitable at all. So I decided not to backtest this strategy on the forex pairs, but I will backtest this strategy on the stocks. So these are the stocks I will backtest, and I will backtest it on the 5-minute time frame. So let's see together some winning trades so you can understand how this strategy works by looking at this. I will leave anyway the link of this video in the description so you can check it. So let's see these two suches on Cisco, here and here. So they are here. Basically, in order to open a short position, you have to check for three things. One is a bearish cross in the stochastic. The other one is a cross in the MACD, a bearish cross, so the blue line must go below the red line. Same things here, blue line below red line. And then you have to check that the data are under EMA 200. I can't show you EMA because I don't have premium plan. And as you can see, here and here there were two suches. So here it was a suches, but a small suches because I will exit at market close. So basically here, and as you can see, let's see, my software told me that this was a small suches, 10% of a suches. Another one, it was almost it was a perfect suches, so that's good. Let's see another example. For example, this one on Mara. So it was here, and as you can see, here we have the cross here, and the data are under the EMA 200. And in this case, you can open a short position. And in this case, it was again a suches. The conditions for long are the opposite. So you have to check for a bullish cross here. So red line, blue line must go above red line. Then you have to check here that the blue line must go above the red line and the data are above EMA 200. So this strategy seems to be profitable by watching at some trades, but this doesn't tell us if this strategy is really profitable. The real challenge is, can this strategy hold up over the long run? Let's see how the strategy performed over 3 years of data. As you can see now, the strategy is profitable without commissions, but not with commissions. As you can see, the strategy is almost statistically profitable on obviously without commissions, but with commissions it's not profitable. The strategy is not good as it claims. So it's an important thing to bear in mind. So don't rely on a few cherry-picked trades. So don't give up. Let's not give up. Let's try to dive into some statistical analysis and let's see if we can find a way to optimize this strategy. Maybe a few tweaks can turn this around. So I have already downloaded all the trades that my software took, and the first thing I noticed was that the average success rate is almost the same for buy and sell. So the first criteria, I can't say if this strategy is more a bullish or bearish strategy. But the most important criteria that I used today to improve the strategy was to run the strategy by testing the EMA 550. So basically what I have found that if you have checked for at least 15 candles below the position was opened, to be above EMA 50 for long position, the new average success rate would have been 43. And for sell would have been like 41.2. So slightly worse than before, but slightly worse than before, but in general we have improved the strategy. So let's add these two conditions to our code and let's see if we can improve the strategy. As you can see here, I added the check for the EMA 50, and here there are the conditions for the MACD, the stochastic, and the EMA 200. Here for sell and here for buy. So you can have clearly see that the code I wrote is this. So now let's run again the strategy and let's see if we improve it. It's important to test if there are no errors. So let's run again and let's see. Look at that. The strategy is definitely performing better. It's again not profitable with commissions, but we have improved the average success rate. And as you can see, it was almost statistically profitable, but we cannot say that it was statistically profitable. And as you can see, it's not performing well with commissions. So definitely not a good trading strategy, but we have improved it. Anyway, let's try to run the strategy on the test dataset, because the test dataset is always the final test to pass in order to say if a strategy is profitable or not. We have to test it on this data, and I remember you that the test dataset are data that my software never seen, so they are totally new for it. Let's see if the strategy is profitable or not on the test dataset. Okay, as you can see, during the last year about in which the test dataset contains the last year basically. As you can see, the strategy was not profitable neither with commissions or without commissions. Sorry, without the commissions and with commissions. The average success rate doesn't go past the average success rate to break even, but it's always in the confidence interval we have calculated before. Surely not good results, but probably we have overfitted today the strategy because the average success rate it doesn't perform very well. And the strategy, in conclusion, with these settings is not so good. So, do you think the strategy is worth pursuing further, or should we go back to the drawing board? Let me know your thoughts in the comments. But before I end the video, I remember you that these are not financial advices. That must be clear. I'm not financial advisors, and this strategy may not perform well in the future like it did in the past. Trading is very dangerous. Pay attention. So, if you enjoyed this deep dive, don't forget to like, subscribe, and see you in the next video. Bye!